Good morning. Welcome out to Market Mornings. My name is Tony Benson, also known as the Pattern Whisperer. I am going to do a disclaimer real quick, get that out of the way. I am not a registered broker dealer investment advisor. I will not give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading. So let's jump right into it. We have CPI coming out this morning in just a little bit. And let me get the futures up here real quick for you before we go to the end-of-day charts. But this is just one screen that I keep. We got the S&P futures up here, and the CPI number is going to have a dramatic effect on the market. So this right here is, it's up a little bit right now. You can see SPX up about 10. Here's the Dow. The YM is the Dow. It's up 59. NASDAQ's up 34. The Russell is up about 3. Gold, GC is gold. That's up 6.5. And crude oil, CL is crude oil, is down $1.20. Basically, that is the futures look right now. But in about 20 minutes or so, when the CPI comes out, it will dramatically change, most likely, or at least it may stay about the same, but it will most likely whipsaw one way or the other. There will be some kind of reaction to it. There's almost always a knee-jerk reaction. I usually would. Well, it's pretty much always. I can't remember the last time. A big piece of data point that the market was really paying attention to didn't have some kind of knee-jerk reaction. Sometimes it'll bolt to the upside real quick, and then they'll go, oh, wait a minute. And then the market will realize that it wasn't good news. It'll turn around and go the other way. So we shall see. It will be interesting. It's always interesting. But getting into some stocks I'm going to pull from the Weekly Whispers. Pretty much this is where I find all my trades. You see the list there on the left-hand side. Once a week, I only look for candidates one time a week, and I look for patterns. Just like you see, the SPX is in an inverted head and shoulders. We've actually broken out 2 or 3 weeks ago. We broke out of the neckline. I don't love the pattern to death. It's a good looking pattern. The neckline's a little steeper than I like. Who knows if it'll play out or not? But technically, if it does, it should run up. The SPX should run up to about 4,600. I don't know if the news and the economic data will provide enough support to push it that high or not. Who knows? It's always a wild card. But the beauty of patterns is we at least have some kind of expectation. So, but like I said, I go looking once a week. That's it. It takes 3 to 4 hours to get a list put together like that. There's 25 symbols this week. I usually have 20 to 30 every week. And that's all I watch for the week. I set up and plan trades on those, and whatever hits. And I've still got this week, the ones that are checked are the ones that I'm still looking at. That have potential, at least possibly today. The other ones are either they've gone the wrong direction or they're not playing out the way that I would expect them to or want them to. So, but you can see there's the SPX. I wanted to start with that. So if CPI number, if the market likes it, then I wouldn't be surprised to see this thing take off and run up. I can't imagine we'd get to 4,300 today, but we could by the end of the week if, like I say, if the market likes the number that comes out. So, but let's jump straight into some of these stocks now. So here's Boeing. Little flag pattern. It's been dancing through that level. This has been on the list actually for a couple of weeks now, if not 3. It's just been stuck in that range. And yesterday we actually broke out, coming a little bit tighter on it. You see, technically the flag and the pennant pattern only take like 2 or 3 weeks to form. This has been going sideways for about 4, 5, 6 weeks now. So it's technically not necessarily a flag anymore, but the one thing you'll realize, especially if you follow me or you see any of the work that I do, is that patterns are rarely perfect. You see the inverted head and shoulders on the SPX, not perfect. I don't like everything about it, but that doesn't mean they won't play out. And the funny thing I've learned in over 20 years of doing this is that sometimes the patterns are the ugliest, that are the wonkiest, that are they just don't look good, or they don't meet the criteria that are perfect. They play out the best sometimes. So I've learned that just toss it aside because it doesn't meet all the criteria isn't the best idea. Usually what I will do is I will adjust. I will adapt. And this is one thing that I think is wise. It took me a long time to figure it out. Is that when the conditions aren't exactly how I want them to be, it doesn't mean that I stay out of the trade. It means that I will adjust the risk. Instead of doing 10 contracts, maybe I do 5. Maybe I only do 2. So, and then when you find the perfect one, then maybe you go a little bit heavier. So you should adjust your risk based on your analysis, right? Some people, when I started, and most of the coaches I had, it was all 10 contracts, and it was all in or all out. And I've learned over the years that sometimes it's better just to get in with 2 or 3, because you maybe not that confident. Maybe you have a little fear for whatever reason. Maybe some part of your analysis says this is not that great of a pattern, or it's not that great of a potential, so take a little bit less risk. It just allows you to manage your emotions better. And that's really one of the keys to trading, is learning to manage your emotions well and learning to adapt the size and the amount of risk you take based on your analysis and how you feel about it is a critical piece to learn to get to that place where you can trade in a calm, cool, collected state. And that's really should be the ultimate goal. Don't focus on making money. Don't focus on doing it. Focus on getting to a place where you can make good decisions day in and day out on every single one of your trades. You're still going to make mistakes, okay? You're not always going to do it. Just like in life, right? You learn throughout life in other areas. You're going to make mistakes. Be gracious, merciful, and forgiving to yourself. Relax. It's not that big of a deal. The goal should be to make less and less mistakes. But get yourself to a place mentally and emotionally where you consistently make good decisions, because you're not letting your emotions get the best of you. Most of your bad decisions come when your emotions take over. And I'm not saying, I never ever tell people to eliminate emotions, because it's never going to happen. That's like saying don't feel anything when your wife yells at you or your husband yells at you, right? It's impossible. We have emotions. We have feelings. That's the way we were created. So you've got to learn to use them and use them to your advantage, actually. So here is Cardinal Health. I don't want to get too distracted with the mental side of things, but it's critical. It's one of those things I talk about often because it's that important. And when I started, I focused so much on the charts that I didn't realize how critical the mental side was. So I do find squirrels in that arena quite often. But here's a nice looking symmetrical triangle. So we're looking for a break to the upside. If Cardinal Health breaks north, and I believe this is an all-time high. Oh no, I guess it's not. That's a quarterly chart. There's monthly, okay. I don't know what that's all about. But that's back in 2001, so that's 20 years old. So I'm not going to worry too much about it. It's not an all-time high, but it's a 20-plus year high. So, but if it does break north, if the CPI number comes out and the market likes it and it takes off to the upside, then this might be a good opportunity. Realistically, we're looking for some type of run like this. But this is where we get a measured move on the symmetrical triangle, and we measure the outside, what's called the base of the triangle, and that's about what we expect it to move if it does break to the upside. So it'll be interesting to watch these. And watch these play out. If you're not familiar with patterns, if you're new to patterns and you haven't watched them, go watch some of these puppies play out, and it'll blow your mind. They don't always, right? There's nothing that's 100%, but it's absolutely mind-boggling how often they will play out just the way that they're technically supposed to, right? Here on Caterpillar, we have a head and shoulders, and I'm almost certain this is an all-time. Yes, this is an all-time high on Caterpillar. But it's pretty nice looking head and shoulders. It's not. It looks good. It's not. Usually, I like to see a little bit more time. This is only like a week or so, a week and a half on the left shoulder and maybe a week on the right shoulder. Typically, they take a little longer to play out. But again, patterns aren't perfect. None of them are perfect. So we take what we get and we adapt and we adjust accordingly. So if this thing breaks to the downside, then we're looking at a target of about 225 or so, give or take. So, and you notice the numbers if you're not familiar with me. The red is the stop, green is the target, and the orange is the entry point. And every single one I have is a 3-to-1 risk reward. So the amount of upside, the amount of potential you have from 241.86 to 227, that profit potential is 3 times as much as the risk. Always. That'll work your mind better than anything else. I don't know how that one stayed checked. That shouldn't be there. Well, actually, you want to see a little analysis real quick, I guess? There's a flag pattern, essentially. But it is almost a little too far gone, I think. It's run so far. But that doesn't mean it can't keep going. And I guess we could. There's a weekly CRM. We're pretty big oversold. So it is possible. But notice how steep and how fast this run is. They just usually don't keep going like that very often, right? Just like they don't fall forever, right? They don't fall like it falls like this and then it bounces back. We get a rally, then it goes sideways. A big rally, then it falls. Then it rallies. These big spikes. And this is what I would expect to have happen over the next probably few weeks or few months. Is you get a big spike like this. And this is back when the market conditions are good. So that's probably a gap. No, well, this is a weekly chart. Whatever the case is. But it's possible to keep running. But there's definitely some heavy resistance right there about 190. So I don't love it. But who knows, right? That should have come off. But GM, here's one another one. And a lot of things have run a lot lately. So it doesn't mean they can't keep going. That's one thing that's hard for me sometimes because once it's already gone so far, there's still a lot of risk. So I sometimes get a little more skittish. But GM's got a symmetrical triangle, which isn't technically, usually it's not a bottoming pattern. Usually it's a continuation pattern. So, but it's there. But the main thing I'm looking at here is this resistance here, about 41.5 or so. So you can see there, and we've got somewhat of a rising through methods. It's definitely not technically perfect, but you got a big candle here, and then typically you would have 3 small bodies in between, and then another big day like this. But you've got several days, and they're not really in between, so it's definitely not technically a rising 3. But is the concept there? Yes. Does it give a little bit of bullish tint to it? Yes, it does. So Qualcomm, finish these 2 up, and then we'll wrap up. There is another inverted head and shoulders. There's lots of inverted head and shoulders and lots of flags and pennants right now. And one thing I noticed is because I'm going through about 300 to 400 charts every single week. Right? My original list I start with is 300 or 400 long, and I whittle it down to the 20 or 30 that I typically have. Right? I go through looking for patterns. And the last week or 2 have been mostly inverted head and shoulders and flags and pennants that are forming. So they're formed now. We just got to see if they play out. So here we have an inverted head and shoulders on Qualcomm. We have broken out of that neckline right there. And that right there is a big deal. Look at the volume. We got a big spike in volume on the breakout to the upside. That is what we need to see on the inverted head and shoulders. It's different than the top. Head and shoulders top, the volume's not critical. Inverted head and shoulders, it is. If you've been through patterns of flash, you know that. If you haven't been through patterns of flash, go get patterns of flash. That'll show you all the patterns. It's got 30 or 35 patterns in there. All the ones you're seeing here, I go through every one of them in that tool. And there's the flashcard squid. There's a whole bunch of stuff in there. So, but that's what we're looking for. And now we've got a little retracement back to the neckline. And technically, this is beautiful. So if the news is reacted positively to, I should say I'd say reacted positively to, because sometimes the news isn't positive, but the market reacts positive, like Meta, right? They came out and had horrible earnings, but the stock was up $30. It was up, what, 20%, 15%, something like that on the day. And some people were just scratching their head going, I don't understand, their earnings were terrible. The market doesn't look backwards, it looks forward. Meta said things are getting better. They're laying off people, which means they're cutting expenses, they're cutting costs. That means profits will go up. So you got to remember the market always looks forward, not backwards. So even though what's behind Meta was bad, what the future looks like is better. So the stock goes crazy to the upside. So the CPI numbers could come out here in a little bit and be worse than expected. And the market could decide they love it. It's like unemployment. The last couple unemployment reports, unemployment went down. Market hated it. And most people in your superficial logical mind says, well, low unemployment's good, isn't it? No, because inflation's high. And if people are still working, they're still paying for goods and services, there's still demand, then inflation won't come down. Right? Which isn't necessarily true, because they're not necessarily directly correlated. They can be, but they're not always. So it's just weird. Sometimes it's really, really weird. And you've got to look past, whenever you're confused about why the market's reacting the way it is, when the news seems on the surface that it's this way, you got to peel the onion back, right? Dig deeper than what you see on the surface. Just because the news that says this is what was behind us is this, doesn't necessarily mean that the market's going to look at it that way, right? So Qualcomm, we got another inverted head and shoulders. The target should be about 150, but I put it about 145, just a little bit short, just in case. And the reality is, one other thing you learn with me, if you don't know me, is that I scale, right? I will scale in. I will pick up maybe 2 or 3 contracts here when it's low, right? I mean, when it's in a really risky spot and it takes less risk, right? If I get in down here and say it's at 128, I've only got $1.20 to my stop. So I don't have a lot of risk. I pick up maybe 1 or 2 or 3 contracts. And then if it rallies, maybe here to 130, then I'll pick up 2 or 3 more. Then at 131, 36, I pick up another 5, and now I have a full 10 or 20 position, whatever your full position is. Now I'm already ahead of the game when I get to the entry point. I'm already up some. And then if it runs up here to say 140, I'd probably pluck out 2 or 3 contracts, depending on what it looks like. If it's running like mad, there's lots of volume, maybe not. Maybe I'll hold on to the whole thing. But the odds are that I'll pluck out a little bit of it here. And then if it runs to 145, I'll take more. And if it looks like it's going to keep going, I'll leave more of it there. So it's all based on what is happening in the moment, right? And then Verizon here is a bearish one. I don't think we had, no, Caterpillar was a head and shoulders. Verizon, we have a nice looking double top, right? 1 top, 2 tops. This is the midpoint. Again, if you've been through patterns of flash, you know that. It is just formed right now. The pattern has formed. It has not broken. That's why you see the trading plan here the way it is, because if it breaks the midpoint, then we have confirmation. That's what we're looking for. If it breaks that midpoint, then we're likely headed down here to about 37 or so. But we have to wait for that midpoint to confirm the pattern. Make sense? All right, I've rambled on, found some little squirrels today. So, but hopefully it's been fun and useful. And y'all have a wonderful day. I would love to hang out for another 4.5 minutes to see the CPI and see how it reacts. But one quick look one more time at the future so you can see it before we go. The market is running a little bit. You can see the futures around. These top three charts are the main ones. That's the Dow, or the SPX, the Dow, and the NASDAQ on the very top line there. And the market is buying into it right now, ahead of it. Somebody's taking a position. Somebody has a lot of guts, basically. They're taking a position running into CPI, thinking that it's going to be a good thing. But sometimes, we'll see how it actually plays out. So anyway, y'all have a wonderful day. God bless. Bye-bye.